Welcome to today's episode of Philosophy Culture. I'm here with an old friend of mine, as you all know, Mr. Emils. How are
Yeah,
you doing?
I'm very good, sir. How
Great,
are
sir.
how are you, my old friend, Carsten?
I'm good as well. I'm good as well. Good, but today we'll talk about Berkshire Hathaway.
Yes, sir.
And what else?
About their background story, if that is how you call it, and we will discuss their portfolio, which is gonna be interesting. So yeah, hey, check it out.
So, today, Warren
Yeah,
Buffett. No,
Berkshire Hathaway
yeah, Berkshire Hathaway and Warren Buffett-ish.
ish. Yeah,
Ish.
it will. We will make a separate episode on him later on. So yeah, stay
So,
tuned, guys. But all right, so Berkshire Hathaway.
okay.
Where do we want to start?
I think we should start with the classic question, right?
I was just gonna actually say that I tend to forget the question now these last episodes, but yeah, you're completely right.
Good. So if I ask you, because it was kind of your choice, or it was our choice, but it was kind of yeah, it was your choice. Kind
Oh,
of.
you mean the company?
Yeah, the company, exactly.
Right, right, right.
Yeah.
Um,
So
yeah.
why Berkshire Hathaway?
Well, since it's so tightly like connected to Warren Buffett and to Charlie Munger,
Hmm.
it's, I would just give my usual boring answer. It's just a no-brainer, I think, to look into it more. And since it is also such a household name in a way, where it what was the saying? The name rings a bell. Was that
Yeah,
like a saying, right? So I think the name really um, activates many bells in many investors' heads when they hear the name Berkshire Hathaway, and it's just a relevant company. So yeah, like it's relevant within the in the investing community, I think.
yeah,
So yeah, that is where my curiosity lies. So that is why I feel it's important. What about you?
that's a really good answer. And you kind of took my took my answer as well. But I would say the same. I mean, the the company is so close connected to the investment communities. And then we also have them. I mean, we have Warren Buffett and Charlie Munger, which is like the chairman, right? Warren Buffett is the chairman and CEO, and Charlie Munger was vice chairman, I think.
Right.
Um, and yeah, those are yeah, they are some icons in the investing world, right? So I
Yeah,
think
and also some
I,
of the like most successful investors, right?
yeah, so I think it's really worth studying them and their um, company
For sure.
or conglomerate.
Conglomerates, yeah, which we'll get into more.
Exactly.
So perfect.
Good.
So
So shall we start with the like brief history of Berkshire Hathaway?
yeah.
Okay.
Let's do it. Let's do it.
Okay.
So Berkshire Hathaway dates back to 1839 when Oliver Chance, I don't know, I guess it's French, founded the Valley Falls Company, a textile manufacturer based in Rhode Island. That is what I have at least written down. Um, so yeah. And over the years, the company expanded and merged with the Berkshire Fine Spinning Associates in 1929 to form Berkshire Hathaway. In what does INC stand for? Is it like incorporate or?
Yeah, I think so. Yeah.
Right. So there we have it, the baseline of it all. Or yeah.
And they merged in 1955.
1929. Or do you have 59 in your notes?
50, 55. So I have
55.
yeah. So Berkshire Cotton became Berkshire Fine Spinning Associates in 1929, and then they merged with Hathaway in 1955.
Right. I think maybe you have the more accurate information.
I'm not sure, but what we are sure of is that they merged.
They merged.
Yeah, exactly. Uh,
And the Berkshire Hathaway was founded. So yeah, or born.
exactly. Yeah.
So yeah.
And then, yeah, then kind of like the First World War started, right? And after that, the sort of textile industry witnessed
Decline or
what?
decline or
Yeah, I can't hear you properly now. I don't know why.
a
Oh.
decline.
Yeah, I declined. Yes, exactly. Yeah, declined. Um, and then we had the Great Depression, right?
Right.
Which all had their like all left their footprint on the company and its employees. And yeah, so I think it was like 1 year after its incorporation that like it had like Berkshire Hathaway was like a really big company incorporation. Yeah, a really big company that had like around 10,000 employees and 14 sort of factories or plants or
Yep.
right.
Yep.
However, they still like after the Great Depression and all these downturns, it sort of it kept going, it kept declining, and that's when Warren Buffett saw the opportunity to basically invest in the in the in the company, right, and start buying stocks.
Yeah.
So if you would like to continue from there, maybe, or should I continue? Doesn't matter.
Um,
Maybe I missed something.
no, I think you are on track. But one thing that I think I got it from his like a part of his like shareholder letter,
Yeah.
where he like kind of explained the history of Berkshire Hathaway, and
Ooh.
yeah, I wanted to bring up a thing which is related to the investing, which you brought up. So I think this is a good moment to yeah, go into the investing, because I
Mm-hmm.
didn't completely understand it, but like it's I wrote down that during the 7 years following the consolidation,
Mm-hmm.
Berkshire operated at a overall loss, which you mentioned, right? And its net worth shrunk by 37%. But then, meanwhile, the company closed 9 plants, sometimes using the liquidation proceeds to repurchase shares, and that pattern caught Warren Buffett's attention. What do they mean by that? Do you understand that? Like by using the liquidation proceeds to repurchase shares of what?
Of the stocks. So they start buying back their own stocks, sort of.
But like how?
So, like buying back from the investors.
But like how can they do that? Like are the investors selling?
Yeah,
Have
yeah,
they like sold the stock already? So it's like
yeah,
um like for sale.
yeah.
Right.
So
Okay.
basically, I think it could be something like, okay, so let's say that the investor had bought the stock for like $2, and then they are like, okay, listen, we will buy it back for $2.15 or something. Um, or
Right.
okay, that's not accurate numbers. That was just an example, but
That was
I
like a
think you get the
hypothetical, yeah.
yeah. Um, yeah, and as you said, I think that caught Warren Buffett's attention, and I also listened to one video about it, and they said that Warren Buffett had actually bought some stocks, and then they started to buy back. The CEO and yeah, basically the Berkshire Hathaway start buying back all or some stock, uh, and they were like negotiating and negotiating, and eventually, um, Warren Buffett got the offer of a price that was lower than what they had agreed on,
Yeah.
and that's what like kind of triggered Warren Buffett to buy the whole company and
Yep.
fire the CEO.
Right.
Um, but yeah, continue. I was
No, no, no. You're right. You're right.
yeah.
I don't actually know where to kind of proceed from where you left off. After he like buys the company or like is the main shareholder, right? Um, what I have written down is that he used the company's cash flow to invest in other businesses and stocks that he believed were undervalued, which kind of is the whole premise or his like the whole kind of core strategy, right, in his investing, as far as I have understood.
Yeah, I would agree because I what I have understood as well, if I can say, it was that Berkshire Hathaway kept like going down or declining even after his sort of um after he acquired it.
Yeah,
And he was like, okay, this is not going well, so I'll just try to sort of change the direction of the whole company.
yeah,
And that's when he started to sell all. I think he sold all of its assets and like completely used the money to buy stocks and yeah, shares in other companies.
yeah, yeah, exactly. Acquisition.
Like, yeah, what did I say?
No, no, no. You kind of you were searching for that word.
Thank
You
you.
said after he had acquired it, so that's when I
Yes.
yeah, yeah. So yeah, you're perfect.
Okay. Okay.
You're
Yeah.
perfect. Everything is good. Um, so yeah, so that's kind of quite like it's a summarized version, but like that's kind of the story, right, of Berkshire Hathaway. It's a like it company doesn't really have a sexy story, so to say, right?
Mm.
Which some other companies have had, which we have talked about on the podcast. So yeah, that's kind of it.
Yeah.
Um, yeah, I think we can maybe jump into Berkshire Hathaway's portfolio
Oh
and
yeah. Yeah. That's an interesting one.
have a look. So, what is the first thing that jumps out to you when you look at the what you call it? What do you call it in English? Like a circle,
Pie chart.
a pie chart, right? That was the word.
Sure.
Yeah,
Yeah.
I was thinking about pie, but I didn't know what the
Yeah.
second word was after. But
Yeah.
pie
Yeah.
chart, exactly.
Um. But yeah, I don't know. Like the thing that would stand out to me is that they are such a big owner, or like such a big part of their portfolio is based on Apple, right? So they own. Yeah, I think this it was said like based on an article that we have is that 42% of the company's investments portfolio is just Apple stocks. Um, so yeah, that's interesting. That's interesting.
Yeah, yeah, yeah.
How about you? Do you have any specific
Like
like
my main idea, which I don't really know how to convey at this exact second, but I will try to get it out somehow. Is when we have listened to David Senra, his podcasts, And one of the main aspects of investing, which kind of is contradictory to this kind of general rule that your investments should be diversified. Because like
Yes.
people like I'm pretty sure Warren Buffett is one of them, and then we have also Charlie Munger and some other names I'm blacking out on, but their investment strategy is that you should invest in like a one thing, like two, three maybe, three companies or like three things that you are really knowledgeable about, and that should be like your investing strategy, that you shouldn't diversify your investment or your portfolio. And yeah, I'm not sure how other companies like or other conglomerate pie charts look. I think if we look back on Louis Vuitton, Moet Hennessy, so like their conglomerate and the companies they have acquired, I think it's like you won't see a company as Apple, which are like almost takes half of the pie chart. I think the like there would be like, or I'm not sure. I'm not sure. Like yeah, that's one idea I am thinking about, and I'm not sure how to relate to this, but I feel like they haven't invested in so many companies which they could have. They have like I think I've also heard it that I like you like to wait for their investments and wait for the right time to really move fast, since they have the cash to do it.
Yeah.
So that is my initial idea, which I don't really know how to really take somewhere, but I guess we can discuss it.
I think that's a very interesting point. And when you said it, I was I was starting to sort of get flashbacks or like get reminded of one of Charlie Munger's episodes by David Senra, so from the Founders Podcast.
Yeah.
And I think that's where I heard it for the first time. Like, well, not for the first time, but I think he said that, you don't have to diversify your portfolio as long as you know exactly what you're investing in.
Yeah.
So I think it could be applicable, right?
Yeah, like to me, it looks almost like for sure it's looks like a lot of companies in a way. Like if we look at the pie chart, I think I will maybe put on the pie chart like on in the video so that people who watch the podcast and see. But yeah, but I think that we have to keep in mind is that they have acquired these companies over a pretty long period of time.
Exactly. Yeah.
And also kept their investment
Yeah.
in those companies. So
I mean, they are applying a sort of long-term strategy, right? So they are not acquiring them just to sell them after like 1 year.
yeah,
They're looking for some long-term investments, and I think that's well, I listened to one of Warren Buffett's interviews, and he said that, or maybe it was somebody else, whatever. But I heard that, it's so easy to actually get rich, like in the long term, because you could follow basically, like, for example, Warren Buffett strategy, right? So I mean, there are so many companies that are like paying out dividends. Sure, their stocks are a bit expensive now.
pricey.
Yeah, especially in our times.
Yeah.
And especially if you're like a normal citizen, and don't have like millions or billions in your bank account. But I think that if you follow the same strategy in the long term and really know what you are doing, you could build something in the end, right?
Yeah, yeah, yeah.
Um, so yeah. On the
100%.
other, yeah, go
Yeah.
ahead.
No, no, no.
No, on the
Nothing
other
you
hand,
can
I
say.
also completely understand other persons or investors or companies that are trying to diversify their portfolio by just buying stocks in different
Industries.
companies and yeah, from different industries. So I mean that's a good tactic as well.
Yeah, but like in a way, Berkshire Hathaway has like have done it as well, even though they haven't
Yeah.
invested in so like now I will mess up my English again, but like such a vast array of companies, if you can say.
Hmm.
uh, but they are still in like different industries.
Yeah. I
Uh,
mean, I think Warren Buffett's like after he acquired um, um, Berkshire Hathaway, he started to invest in insurance companies, right? Because he figured out that the in insurance companies had some capital that could be used to further invest in other companies.
yeah, exactly. I think that was actually like one of the first acquisitions
Yeah.
which they made. Let's see if I can find.
So I think two of the first were National Indemnity Company and National Fire and Marine Insurance Company, uh, which is the later is now part of the first mentioned. And they were both purchased in 67. And then they also bought like Geico and General Reinsurance.
Wait, 67. What?
No, in 1967.
Ah, okay, okay,
Yeah. So
exactly.
yeah, I mean they own in Coca-Cola, in Apple, in Kraft Heinz, um, and in many
Dairy,
different.
Dairy Queen. Yeah,
Yeah. So they do have a very diversified portfolio, even though they are majors, even though their major part is like Apple.
yeah, yeah, yeah.
Um,
Exactly. But
no,
like another interesting like aspect, or do you have something more you want
no, no, no,
to?
go ahead, go ahead.
But yeah, I was thinking of this thing that I heard on the Founders podcast is that both Warren Buffett and Charlie Munger like hold like 90-ish% of their net worth in Berkshire Hathaway. So that yeah, kind of again kind of re-emphasizes their investing strategy in a way that you should that they haven't like diversified their own net worth.
Yeah, yeah.
So or
And I
what do
think
I
they also, yeah, and I
yeah,
think the company itself becomes more reliant when you know that the owners are actually so big shareholders,
exactly,
because
yeah,
it gives you like, yeah, they own it. That means they are, they actually know what they're doing and sort of want to see it um, grow.
exactly. They aren't saying one thing and doing another thing, right?
Yeah,
So for sure, I think that's a major component of why Berkshire Hathaway is so attractive in the investing community.
yeah.
And also, I
Mhm.
think they hold these. I'm not sure, but I think they hold like these annual
Board meetings.
board meetings, yeah, which kind of have become quite popular. I think I read it
Yeah,
somewhere.
yeah,
So,
yeah, yeah.
so,
Exactly. Yeah,
so, which yeah. Goes to show that it's quite popular.
I'm just wondering how it like I'm just wondering how their strategy or if their strategy will change after Warren Buffett. Well, now Charlie Munger is not among us anymore, but Warren Buffett is. So I'm just wondering how the whole thing will end up after Warren Buffett uh
Passes, yeah.
yeah passes away or just uh, sort of retires, even though he might he could have retired a long time ago, but I think you understand what I mean. um and I don't know, I read somewhere that he will or he has donated some money to, or like some part of his net worth to Melinda and Bill Gates Foundation or something like that. I don't exactly, I'm not sure about the name, but I think it's Bill Gates Foundation. uh Bill Gates and his
Yeah.
wife foundation, yeah.
Yeah.
So I'm wondering how everything will sort of end up in the future.
Mm-hmm.
Um, and yeah, like we had an episode about Bernard Arnault and about LVMH, right?
Yeah.
Which felt, well, it is more of a family business, even though it's not a business, it's a sort of empire in the cosmetics and the luxury world. Um, but it feels like Berkshire Hathaway gives me sort of like similar vibes, in a sense that it's like Charlie Munger and Warren Buffett are like um the base, or like, yeah, that are the base people, like the main um
Mm-hmm.
persons in the whole company. So that's
Right.
so interesting. That's so interesting, and that's why I'm wondering like how everything will play out in the end.
Yeah, yeah, yeah. Well, do you know if Warren Buffett has like, or I'm sure he has like some kids and stuff,
Oh
right?
yeah,
But like I'm not that informed specifically about like his family situation.
yeah. Let's see.
Because as we talked about in the I always mess up the abbreviation, but like Louis Vuitton and Moet Hennessy, like Bernard Arnault's family, as we talked about in that episode, that they have, or he has put like his children in pretty um, prestigious positions
Yes.
in the other um, companies that are owned by LVMH.
Yes. Yeah, exactly.
So yeah,
So Warren Buffett has three children: Susan, Howard, and Peter. But I'm not sure, and I'm really not sure if they have any, if they are like high position within the company.
yeah, yeah. Interesting, interesting. Yeah.
Yeah.
Mm-mm-mm.
So, yeah. Did you have another point, or
Nope. I don't think so. I don't. Yeah, I don't think so.
okay?
I think we are. I think we should. I don't know. I feel like we no, maybe should have done a bit more research about the companies Berkshire Hathaway has acquired, like Coca-Cola, Apple, like and maybe uh learn about some reasons why, for example, Berkshire Hathaway or Warren Buffett felt it was such a good idea to buy such a large amount of stocks of Apple or whatever.
Yeah. But I think it was actually mentioned in one of the articles that we had, right? That their approach is like, or like their main focus is to invest in businesses that have like a very competitive, very big competitive advantage,
Oh,
right?
that's perfect that you brought it up, actually.
Yeah.
Yeah, continue.
Uh, no, but yeah. So their main focus when investing in businesses is to invest in businesses that have a very good competitive advantage, and makes it sort of difficult um, for its competitors or like for other competitors to enter the market. Um, and yeah, they also look at like um, strong brands, right? And companies that are offering like a unique product or a service.
Exactly. Yeah. So I found the paragraph that I read to you
Yeah.
earlier, and which is, yeah. So another aspect of Berkshire Hathaway's approach, it is its focus on investing in businesses that have a moat around them, meaning a competitive advantage that makes it difficult for other companies to enter the market. This can come in the form of a strong brand, as you mentioned, um, high barriers of entry, or a unique product or service. Berkshire Hathaway believes that companies with strong competitive advantages are more likely to have sustainable profits and generate value over the long term.
Yeah.
So that's what's up.
And that's interesting because in the beginning, when Warren Buffett started his like investing career, I think he was like buying companies that were doing bad and had
Mm-hmm.
like a low share price.
Yeah.
And then after he bought Berkshire Hathaway, he started to looking at companies that had like a fair price and that were doing like pretty okay
Yeah.
and presented a good future or like presented a good potential to grow in the future.
Exactly.
Um,
Yeah. Which, yeah, it's it's fascinating. It's really interesting.
yeah,
And I think that kind of goes without saying, but Warren Buffett like really, I think he like, or he reads a lot. That's for sure. That really goes without saying. But what also goes without saying is that a significant amount of research is done, right? To um, like he studies these companies, and I think he's quite famous for it as well. I think. Uh, and yeah. Which
no, I
was
think yeah. Go ahead. Sorry.
no. What did you wanna say?
No, and now I think he has like he has like employed a lot of analysts and all kind of people that are doing that job for him.
For sure, yeah, teams. Uh,
What? There was an episode by Founders. I think I listened to it this summer. Now we're in December though, but it was like a few months ago. Um, and I think David Senner was talking about a company that was acquired by Berkshire Hathaway
mhm.
and how the whole process went so smoothly and neatly. Um, and that Warren Buffett was like, I think he analyzed it like very shortly, but he just, I don't know, like everything went so smooth,
Yeah.
and he was like 100% sure of what he was doing.
Hmm.
Um, so even David Senner was kind of fascinated about about the story itself.
Yeah.
Um, and it's kind of understandable. I mean, he's 93 years old, 94, 90. He's in his 90s anyway,
Oof,
90s.
crazy.
So I think he's like he really knows what he's doing.
For
Um,
sure.
yeah,
And really, you know how we hear about this concept of compounding returns, right?
yeah,
And a really cool idea, which I think it's so true that I heard from Founders Podcast, is that knowledge compounds as well.
Yeah, it does.
So shit. Imagine having Warren Buffett's brain. Yeah,
Yeah, and being like 20 years old.
yeah. Shit.
Yeah. Yeah.
But yeah. That's amazing.
It is. It is. And talking
But
about competitive advantage. Yeah, go ahead.
no. I had nothing. I had nothing.
Okay. No, but I mean, talking about competitive advantage, if we look at the portfolio, or at least the big companies of the big companies from the portfolio, we can see like Apple, as mentioned before, Bank of America,
Hmm.
Coca-Cola.
Yeah.
Then we have Kraft Heinz. Then we have like Visa, MasterCard, Amazon, US Bank, Verizon. So like all of those, the
Have you frozen? She. You froze.
I know. I was talking to myself. What was the last thing you heard?
You were just naming the companies. I
Okay,
think you
no,
were
but
gonna say something about one of them. I think.
oh yeah, but Coca-Cola, for example,
Yeah.
have been around for like decades. Um, so yeah, I think all of these companies, more or less, are very famous.
Hmm.
And especially in the US. I mean, now I haven't heard of, for example, Moody's. Maybe,
Yeah. Yeah. Exactly.
yeah, Moody's and Davita.
Do you know what Kraft Heinz is?
I'm just thinking about the ketchup.
Yeah, me too.
Exactly. So yeah, we can look it up. But I think Kraft Heinz are like they own a lot of grocery.
Brands or
Yes,
chain.
yeah. It's an American multinational food company formed by merger of Kraft Foods and H.J. Heinz Company.
Big food.
Yeah.
Shit.
And basically the owners are Berkshire Hathaway and 3G Capital.
Hmm.
Um, but yeah,
Interesting.
yeah,
Like Berkshire Hathaway really kind of reminds me of um a crocodile or a alligator, which we have like seen in like these animal documentaries. Like they're
this,
like
this,
just waiting around,
yeah, exactly.
and when something good comes along, but like it's perfect. Like it's kind of pretty. It's like common sense in a way, because if you
Yeah,
have cash, which they always have had, then you have the ability to move fast, and when something good comes along, you move fast, and boom.
yeah, and the more companies they are acquiring, the more cash they get.
Yeah.
So it's like, yeah. But then I think Warren Buffett also mentioned, or I think he was mentioning in one of these articles that he or maybe it was Charlie Munger that said that it's better to wait for a good opportunity than wait for or than take a stupid risk or something. No, it was something. It was really good and it made perfect sense.
Hmm.
Uh, but like briefly said, it is like I think the whole point was to just remind investors that it's good to wait for good opportunities and actually know what you're doing and what you're getting into
Hmm.
before just investing recklessly.
Yeah.
Um, So yeah.
Oof, oof. That's really cool. I can't wait to be older and in the morning wake up, read some sort of investment or like some news about investing or like I don't know, like shit.
Financial statements.
Yeah, or some like what you call it, like economy based newspaper or something like that.
Oh yeah. Yeah.
Uh, which kind of takes me to Michael Bloomberg. Do you know? I think you know who Bloomberg is.
I think yeah.
So we will do an episode on him in the future as well, but because he has really a fascinating story. I listened to the Founders podcast about him, and that's a really, really good one as well.
Yeah.
So, yeah. All right.
Hmm.
Do you have anything more you want to?
I don't no, I don't have anything specific to add. Like, I think we have gone through it like briefly, but
Yeah.
as we mentioned in the beginning, it isn't so much to actually tell about the history of the company, or maybe
Yeah.
it is if you're like really getting into details.
Well,
But
yeah, I think there's a lot more to go into when we are coming to like you know the moments of acquisition, like or like which I mentioned like earlier, like what were the things that or signs that yeah
of course, I
were
mean, if we are breaking down the entire business, I think we could go into some extreme rabbit holes and get some crazy details, which
yeah
will actually be very fascinating. Uh,
exactly
but I was just thinking, like, we have kind of covered the big picture
yeah
of the history and the present.
yeah
Um, so yeah,
exactly, and also speculated about the future, so we have the whole thing.
yeah, that will be interesting to see.
Ladies and gentlemen, thank you for listening to another episode of Philosophy Culture. We hope that you enjoy this episode about Berkshire Hathaway and that you gain some information that will help you navigate life's spin.
Exactly, and feel free to write in the comments if you own any stocks of Berkshire Hathaway. Maybe you own any of the A class stocks that are pretty expensive right now. Otherwise, write down what you think about the episode and maybe future episodes that we could do. And don't forget to subscribe so that we could see each other grow. And so,
Hey.
Until next time, right?
Until next time, adios.
Adios.